All right, what's going on, ladies and gents? We managed to get that breakout for Bitcoin above the $70,000 price level here. We managed to top out at 73 roughly, and we've now seen a very nice pullback into a critical price zone, $71,000. This was a previous area of support, and I am now expecting it to, resistance, and I am now expecting it to potentially serve as some support for the market as well, which is absolutely fantastic. Very, very cool to see. Now, I want to tell you guys a little bit about where I think this market could go in terms of setting all-time highs or potentially pulling back, where this thing could end up going next. And the first thing I want to do to help answer that question is just look at this pennant here. Now, this pennant stretches roughly 37 days, and we broke out at about 25 days into the pennant. And that is a very, very important bit of time-based analysis, because what that tells us, if we do the calculation, and you can punch this in the calculator yourself, is that we have broken out 67% of the way through this pennant's life, basically. And that is absolutely great, right? These pennants, they typically, you want to see a breakout 66 to 75% through the completion of the pennant. And the reason for that is if you break out any sooner, like up here, you haven't given enough time for the pennant to mature, so you can't really trust it. If you break out later on, like toward the apex over here, it's just not a real, it's just not a real breakout anymore. You're just, you're not able to respect the pennant anymore because you're just trading with no liquidity and nothing's actually happening. So I think that's a really, really important specific point to help us understand if this is a real breakout. We did get the breakout at the right time, so that is absolutely huge, very, very important, and hopefully should be a good sign for the market. Now, at the very same time, we've managed to produce a 4.7% breakout to the upside above this high. A lot of people are going to be looking for the 1% or 3% rule. There's two separate rules for breakouts that a lot of people look at, 1% and 3%. We've managed to hit 4.7. So if you align with either of those, your conditions have been met. Now we're also bouncing off this 71k area, which is absolutely huge. So I think that if we are able to hold this level, that next area of resistance up at the all-time high $74,000 is going to be quite easy to get up to. There is no resistance between where we are now and getting up to that price range. You can see it very clearly based off all of the price history Bitcoin has ever produced within this price range, which was, by the way, only spanning across roughly 3 days. We do have very, very little standing between where we are now and getting back up to that level. So just a light push should be able to get us there. And there's a lot of talk about potential fake outs. I was actually discussing this just earlier on the Financial Summit channel, but this is definitely something which is worth considering, where the market could end up coming back up to this all-time high, maybe even trading above it a little bit, but forming a fake out and then coming back down. I don't want to rule this out, ladies and gents. We've actually already done this quite a few times with Bitcoin. Recently, not recently, historically as well. It is a key characteristic. We've already established on this YouTube channel that deviations are indeed Bitcoin's love language. And given that we are right at the all-time high, and bear in mind, we have done this already. The previous all-time high was previous all-time high for Bitcoin that we set in 2021 was around over here. We did the exact same thing last time, ladies and gents. We set this all-time high, we got the breakout, and it was just a fake out. It was just a deviation, and the price ended up coming back down. So I don't want to rule that out in terms of happening again, because if it does happen again, it does put us in a really nice sideways range, which could be very, very healthy for the market. And it is one of the key ideas that we were discussing in this market as well. Now, if we do take a look at surpassing this all-time high, then it's back to the same thing that we were talking about already on this channel in terms of setting new all-time highs, which is very simply very straightforward, that when we are doing stuff like this, we are going to be typically looking at just hitting psychological areas of resistance, right? I mean, we don't have any price history above the all-time high. That's because it's the all-time high, and so naturally we don't have anything to go off whatsoever. So I think we're going to be looking at a very, very clear-cut situation of psychological areas, acting on the market a lot more than anything else. And I think that's exactly what we saw before when we managed to set this all-time high at 74k. This was simply a front run of the $75,000 level up here. Anybody that wanted to sell at 75k was thinking, or many people that wanted to sell up here were thinking, well, hang on a minute, everybody else wants to sell here, so I'm going to sell a little bit lower. And that keeps happening until you find the top at $74,000 there. So that is definitely going to be one of the key things that I think we could be seeing pushing us potentially up to 80k, 85, any round numbers like that. very, very doable for the market. Now, if we take a look at some of our key indicators here, we have really good signs starting to show up in the market. These are not necessarily signs that I would trade, but I'm going to show you them anyway because they are very interesting. And to be honest, it doesn't matter if I would trade them or not, because what you're going to get with the phenomenal links in the description down below are huge bonuses totaling over $100,000. And these exchanges that I've got linked down for you, when you start signing up and trading using my links down below, they're going to give you completely free positions, right? Bybit right here, the best exchange in the game, hands down, is offering you guys a free $500 Bitcoin position that you can go long or short with. You can do whatever you like with that capital, and if you generate any profits, they are yours to keep. You can withdraw those profits. If you lose the money, it doesn't matter. That's Bybit's loss. That is the cost they're paying to have your beautiful account registered up on there. So definitely check it out if you are interested. BingX and 2bit are two phenomenal no KYC alternatives. That means they're not going to take a picture of your passport or yourself or anything like that. They will just let you trade. So definitely check them out as a phenomenal alternative to Bybit. Also with huge bonuses. Again, not even having to worry about what you do here because this is free capital they're going to be giving you when you start trading. So super, super cool stuff there. I do want to remind you guys, if you are on Bybit, you're not going to get any of your bonuses until you do the KYC. So please do that if you want to get your bonuses, but you're wondering why you haven't got them yet. Now back to our indicators here. 4-hour Ichimoku cloud steadily rising up toward that key $71,000 area. If we can start to build some confluence here, maybe even trade sideways, that would be absolutely fantastic, because we're going to start to see some of our indicators catching up. The 4-hour EMA ribbon, for example, already angled up quite aggressively. It's probably going to get up here just within the next 2 days. Obviously, if we stick to the 1 hour time frame, it's much more aggressive than that, so this would be something to pay attention to right now if we do get a deeper kind of pullback back into this range. You know, a lot of this stuff is just right now, in my opinion, just going to be back testing before potentially continuing on higher, right? So that is definitely something that I would keep in mind. We've got, you know, back test potential coming all the way back down, I would say, to this kind of rough price area here at about 68.5. This was obviously one of the key areas that the price was struggling at a little bit. And if we actually go ahead and take the fixed range volume profile tool, which is just a VPVR, we can also see that the point of control sits very similar here at actually 67. So a little bit lower, but more or less the same kind of price range. And we can actually illustrate this by drawing a box right here, which I'm going to say should look something a little bit like this. It manages to capture a few of our key reversals here. Take a look at this. Really, really nice reversal price action taking place right here. Some nice consolidation, more strong reversals here, smaller reversals, nice support, more support, consolidation, right? Definitely an important level in the market, in my opinion, and this would be another potential bounce back zone. So I wouldn't be too worried if we even fall back into this pennant right now. I do think that right now we are still angled to the upside. That doesn't necessarily mean that I think we're setting all-time highs. I don't want to get too excited like that. You guys know the deal. I'm not here on this YouTube channel to be getting excited and rallying behind super, super fun ideas and stuff like that, because that's just not how you make money in these markets, right? I'm going to leave the excitement for the other players who, just don't really know what they're doing, who are looking to be in this market for fun, not for money. That is most people, believe it or not, and their actions and, more importantly, their profit and loss statements will prove that. That they're chasing highs or chasing excitement, not money. A very, very important distinction, which I think most people do tend to miss, but you're not going to miss that if you're watching this YouTube channel, which is absolutely fantastic. If you do enjoy this content, ladies and gents, do me a huge favor and smash those likes up. Double check that you're subscribed as well, because this is all very time-sensitive content. We want to make sure that we're checking the bell icon as well, so that you do get notified of my videos. You're also going to get more analysis from myself and my team for free around the clock with this 4Flies Gold Telegram channel link right here. So definitely check that out if you are interested. I also very briefly want to tell you guys a little bit about a new offer that I've just been launching. It's something I've already done a lot with yearly VIP members, but I want to make this a standalone thing now because it's been so successful, which is literally a 12-week program where you are going to be talking directly with me all about this stuff right here, and it is going to be weekly calls. The first few weeks we're actually going to do more than weekly. I think like 2-3 calls a week. We still haven't completely fleshed that out, but if you are interested in that, if that kind of thing sounds very interesting to you, then please reach out following these links. This specific link right here, this is the direct contact link to me. Only use the links in my description. This is going to be expensive, so please be prepared to invest in yourself if you're interested. But if that does sound cool to you, then reach out following that link here. But let's come back to the chart here. There's so much more that I want to discuss with you guys. If we take a look at this on the larger time frames here, one of the key things that we can see very, very clearly is we still haven't come back down to test this key Ichimoku cloud of support, which is actually something that we do quite often when we're in uptrends, right? We managed to do it right here when I entered my long position. We did it right here again back when we bounced off the 25k area of support. We did it back here at $38,000. But since $38,000 right up to now, we haven't actually come back down to this area of support, and that is about 75 days since then. So 2.5 months that we haven't actually been able to come back down to this area of support. And I really think that we have to. I really think that, you know, at some point you're going to have to expect that this is going to be somewhat magnetic to our key areas of support. The one-day Ichimoku cloud, just one of the most phenomenally reliable indicators in my experience over 7 years in this market. Take a look at this back when we were having a really nice uptrend. And by the way, the previous bull market, we barely even touched it. So, you know, you don't, you know, if this kind of thing makes you feel like, well, fuck it, we don't need to pay attention to it, then fair enough. I actually understand where you're coming from. But if we do take a look at this back in 2017 and really start to understand what the market did back here, I mean, it was so reliable, ladies and gents. We're either coming into it or very, very near to it on many separate occasions, and it does turn out to be a phenomenal indicator. And really, what I'm getting at here is that a lot of these indicators are actually magnetic for the price. For example, the daily EMA ribbon as well. You know, very much an indicator that the price likes to come back to before continuing whichever trend it's already in right now. So, you know, that support is also actually looking very, very good for us right now, still pointing to the upside as well. You know, like I said, with these factors, if we are able to continue to get that move up, then for me, it's going to be, you know, for example, 75k as a first pit stop and then $80,000, you know, but, you know, that is shown over here. But with our kind of, you know, Ichimoku cloud and other indicators like that, we haven't actually come down for a big enough correction yet. And, you know, we do see that from a couple different perspectives as well. Now, one of the other things that I want to talk to you, ladies and gents, about in this live stream, in this video, my bad, is the S&P 500. We've just seen the S&P 500 open here for another trading session. It's actually been open now for a couple of hours, and I think that what we're looking at here is a little bit of a heavy index right now. You know, it has actually rallied up from this low in October of last year without a single significant pullback for 160 days, up by 28%. So, you know, definitely, you know, a big move. The largest pullback that the S&P 500 has seen has been, you know, about 2.5% here, or you could say 2.6% here. You know, we really haven't seen any big pullbacks. Let's take a look at this one here. I'm just curious, what is this pullback? That's 2.1. So, you know, we haven't actually seen any big pullbacks, right? Compare it to what happened here. That was a 6% move, or down to the absolute low, an 11% move. You know, this to me is more so what we should be expecting for the S&P 500. I don't necessarily know when that's going to come, right? It's the exact same problem as Bitcoin. When you're setting all-time highs, there is no price history, so there's nothing to go off. But, you know, we are at the 5,200 area here. We have started to slow down just a little bit. We have started to pull back just a little bit. Is this going to be the pullback that takes it much deeper back down to its previous all-time high for that back test before continuing up? Potentially. I don't know. You know, I don't know if that's going to be what this is, but I certainly would like to see it. The sooner the better. And we do have a sign that this could be one of those situations where we are approaching it now, because we've been seeing really nice strength on the dollar. We've seen a bit of a pullback on the dollar here, but the dollar has been testing this area, and we know that the more you test an area of resistance, the weaker it tends to get, which might send us up to the next area of resistance, up at about 105, 106. And if the dollar does make that move up, even though it's a small move for the dollar, that would probably mean some blood for the S&P 500 and for Bitcoin. I still maintain my position, ladies and gents, that the fate of Bitcoin is actually still largely in the hands of traditional finance, not just Bitcoin. A lot of people actually struggle to accept or even understand this, but because Bitcoin is treated like a tech asset, a tech stock, what actually ends up happening, and we've seen this demonstrated very clearly in times of panic, is that people are going to be most interested in Bitcoin when their conventional investments are doing well, right? And when those investments are not doing well, like when the S&P 500 is not rallying up and the S&P 500 is actually correcting. For example, you know, we've seen this very clearly with the March coronavirus crash. If we take a look at that real quick right here, you know, this was a situation where the whole world was worried, you know, and it didn't matter that Bitcoin was actually in a really good place, right? Bitcoin was actually indeed at a very good place back here. You know, we just rallied back up to 10K. We had a nice big correction from 14. There was no reason that we couldn't get back up to that 20K level, but real world events and things that were scary in conventional markets scared Bitcoin traders out of the game as well. And that's where we ended up seeing a big 70% drop for Bitcoin. That now we see the same thing happening with altcoins as well. I'm just giving you all of this evidence so that you can understand that these are real factors that weigh on the market. When Bitcoin gets a little bit scary, when it starts tumbling and getting shaky, and especially when it starts getting sharp pullbacks, people don't want to hold altcoins anymore. It's the exact same thing. When the big safe asset stops being safe, when it stops making you money, when it stops being attractive, you don't want to be in the riskier asset, and I think that's why, traditional finance is going to be a big important part of where Bitcoin could be going. And that is going to be something I'm going to continue to watch on this channel as well. Now, quickly moving on to the Bitcoin dominance before coming back to some more Bitcoin analysis, we do have a really nice sideways range here for Bitcoin's dominance, and we are at the very top of it. In fact, we're outside of it. I do still think we're going to be climbing in Bitcoin's dominance here. We have seen a very small recovery for Ethereum against Bitcoin. Many of you guys, by the way, in the last video asked me for an Ethereum Bitcoin video, so that is going to be coming next. I am very excited to give you guys that video. If you are excited to see it, do me a favor and smash those likes up. But just to give you a teaser on that video, we are doing one of the scariest things we could potentially be doing right now on this Ethereum chart, which is number one, and again, I'm going to go very in depth on this in the next Ethereum Bitcoin video, so just make sure that double check you are subscribed, you have got the bell icon checked, because many of you people actually watch this channel without being subscribed, which means that you're missing content. You're not going to get notified of all the videos. It's not going to show up in YouTube all the time if you're not subscribed. Even if you are subscribed, it's still not going to show up all the time. It's just really annoying, but it's going to be a little bit better. Now, what we had last time here was we came down into this price range here for Ethereum against Bitcoin, but we didn't spend much time in it. We actually managed to bounce up pretty quickly within 9 days, and then we were back above the yellow box, orange box. This time, it's been, 170 days, right? I mean, we did have some times where we were above it, right? But broadly speaking, a lot of the time that we actually spent was in this box, which just in and of itself shows us a lot more weakness than we had last time. But what we're doing now is we're also, after kind of falling down, we're also coming back up potentially for a kiss of death. You got to bear in mind, if this was all support before, well, then it's probably going to turn into resistance now, especially if we're dropping below it. Now, that's going to be more likely if we get a substantial drop below it, right? Like if we get a drop that looks a little bit like this, followed by a subsequent, nice big 18% recovery, then you can be a lot more confident and this will probably act as resistance. Right now, maybe this is a fake out and we just continue and everything's fine and it's basically like this, right? I don't want to rule that out, but we do have the early cracks here. We've already done it once. Are we going to do it again? I don't know, but when you've already gotten one fake out, the likelihood of getting another fake out to me is just not as high as I think most people would want to think. So that is definitely something I'm going to be keeping an eye out for, and I'm going to continue to build on that in the video I'll make just for Ethereum as well. So that to me is super exciting. If we do bring it back here to the Bitcoin chart though, to just take a larger view, a longer term view of what's been going on here, we are still very much in a situation where we need a more substantial pullback. I think that's something which I can see very clearly at this stage. If we take a look at the pullbacks we've had so far, that was 22%, 23% there, that was 19%, back here was 21%, over here 21%, and over here was a 17% drop from this high down to this low here. So we haven't seen any substantial pullbacks whatsoever since the entire beginning of this bull market. If we take a look at what happened, for example, back in 2017, which was a phenomenal real bull market here, we were actually forming much deeper corrections. Take a look at this right here, ladies and gents. We got 31% right here. We got 40% right here. We got another 40% right here. Moving further back, we had a 32% here, we had a 35% here. These are all much more substantial pullbacks than what Bitcoin's doing right now. And that is a characteristic of a market which is immature. An immature market is going to have very deep pullbacks, and I think Bitcoin is still a very immature market. The reason I think Bitcoin is a very immature market is because we bounced off the $38,000 level, and then within less than 60 days, within less than 2 months, the price doubled. It went up by 92%. 10%. So that is not a hallmark of a mature market. Mature markets move a lot slower than that. And so naturally, if we are moving up like this, all price action like this does end up getting punished. It's never had an exception before. I don't believe that we're looking at an exception right now. So I don't know when that correction is going to come. I don't know if it's going to come here or when we're $50,000 higher, but we're definitely due for it. And so if we do start to see any early warning signs, any cracks, I'm going to be paying attention to that, because those will be things that I'm going to be interested in trading, potentially ripping some trades. Of course, you know the deal right here on Bybit and the other phenomenal exchanges that I am working with here, with the links in the description. Definitely do check them out if you want to support the channel a little bit and get access to some huge offers with lots and lots of free cash bonuses and discounts and all sorts of other cool stuff like that. Again, a lot of people ask me, what would I do if I was starting fresh again with no money? I would just rinse the fuck out of these campaigns. I would get as much free capital as I could with as many of these bonuses as possible, simply because it is a huge, huge head start. Like I said, with Bybit giving you a free $500 Bitcoin position, just putting a 20% profit on that, which is so easy to pull off in a market like this. You're already taking home $100, and it's money that, you didn't even, it's not even your own money that you're risking. So really, really cool offers there, well worth checking out. One of the other things I want to mention now is it does look like we've had kind of two key consolidations, corrections since the big breakout from 30K, right? This was a huge breakout. It lasted about 7 months that we were trading sideways, and we managed to get a nice big breakout, right up to where we are now. I mean, huge moves up the market. But since that breakout at 30K, we've only really had two corrections. The first correction was here in the $40,000 range. This was a nice 60-day price correction right here. We did also correct down with price by 21%, which is absolutely fantastic. And on this occasion here, since we entered this price range right up to now, we have been in this price range for 40 days. That means 40 days of not trending, 40 days of more or less staying in the same place. Like I said, more or less. So that does look like now on a macro scale we've had two key corrections, which is absolutely fantastic. They're not big enough in my opinion. I do still think they need to be bigger, more substantial. Whether that means a deeper price cut or a longer term correction, I don't know. Honestly, I would prefer a deeper price cut because it's quicker and then it's over, so there's less there's less time. Like when the market gives you a long time based correction, you guys are going to remember what was happening back here. I think many of you guys were here back when this price action happened. Just let me know. Tell me you were here in the 30K range, 25K range. Tell me in the comments. I'm very curious how many of you guys were actually here. I do, by the way, read every single comment. You guys can tell I read every comment because I talk about the comments in the next videos. And you're going to remember, if you were here, that this is a kind of price range that will really grind you down. I mean, those of you that were watching this YouTube channel, we weren't worried at any stage. We were bullish the whole fucking way. I've been in my long since back here, and I've been bullish the whole way up until now with my money, putting my money where my mouth is. So if you're watching this channel, okay, maybe you're not going to be that worried, but a lot of people were actually quite concerned in this price range, because these price ranges, they just give you a lot of time to think and overthink and overreact and overanalyze, and that's definitely not something that we want to be living in or dealing with here. So, in that sense, I do think price-based corrections are better, but who cares what I think? The market is going to do exactly what the market wants to do, and right now it does look like that next consolidation range could have come to an end, but I wouldn't want to rule out the possibility that we get that breakout, but it just turns out to be a fake out, and then we continue trading in this kind of sideways range here, for the next couple of months, especially because of the halving. One of the key things I want to show you guys, which I've actually never really talked, I've talked about this a lot, but I've never really drawn your attention to it, is that immediately, actually I probably have drawn your attention to it now I'm saying this out loud, is that immediately before and after every single halving in Bitcoin's history, nothing has happened to the price, right? Take a look at this candle here, where this candle spans, let's calculate, this candle spans a 20% range, which granted is quite a bit, but this is a weekly candle, so not that much. I mean, the previous candle just before that was a 26% move. Here's another big one, 56. Like, we get big weekly candles for Bitcoin, 102% candle here. Actually, this was to the downside, so it was more like 50% down. But the reason this is important is because we can see that immediately before the halving and immediately after the halving, nothing really happens in the price. But, the weeks that are not surrounding the halving, right? The weeks before the halving, but not immediately before the halving, or after the halving, but not immediately after the halving, right? Basically, this is so confusing. Basically, give a little personal bubble space between before and after each halving, nothing happens in those bubbles. After those bubbles, all the fun stuff happens. Before those bubbles, all the fun stuff happens. If we take a look at the previous halving before that, it's the exact same picture. Things are really fun, really, really heated until right before the halving. Right before the halving, we're super calm again, nothing's happening. Right after the halving, we're super calm again, nothing's happening. And then the drop continues. We take a look at the previous halving before that, and it's again exactly the same image. Right before the halving, nothing is happening, right? It's just sideways. Right after the halving, again, just sideways. Before that, big move. After that, big move. This shows us very clearly that halvings are basically sandwiches, ladies and gents. That is the takeaway of this video today. Halvings are sandwiches. If you've made it this far, 25 minutes into the video, smash up those likes and write in the comment section, because everyone else is going to be like, what the fuck are you talking about? Halvings are sandwiches. Because they are sandwiches. They are sandwiches where on either side, the bread is usually very nice, very explosive upward price action, but the actual sandwich of the halving is usually a lot more boring. It's almost like being in the eye of a hurricane. It's like being in the middle of a hurricane where everything's super, super calm. But on the outsides of it, things are very, very hectic. And I think that if we do end up kind of consolidating and trading sideways and pulling back down to the 60K area, that actually fits in with this narrative perfectly. So I wouldn't rule it out, especially if everybody else and their grandmother is going to be starting to get very bullish in this market as well. Now, how do we determine if that's actually what we're looking at? It's just, a continued wait and see approach, right? We've got to continue to watch what this market does and see how it responds to these levels. Previously, when we came up to this level for the second time, right, we had this nice big pullback and we came back up to this $71,000 level. We didn't actually do anything. We formed this really nice falling wedge here. We got the breakout, but it didn't actually take Bitcoin higher. It just sent Bitcoin to the exact same ceiling and we traded sideways. This was actually courtesy of Mike on the Fin Summit channel, because I didn't actually spot this before. And that was a very, very key sign that the market was lacking strength. And I think a lot of people were able to pick up on that. I think a lot of people were able to recognize that the market was indeed lacking strength back here. And what that meant was we ended up getting the pullback here. Now, so if we do end up kind of setting a new all-time high or just getting back up to this all-time high, but it's not with conviction, if it's not with strength, if it's not with a lot of volume, if it's not with XYZ factors that you might be interested in, then you might be able to determine that actually this market is not producing enough strength right now and it might have to pull back. But on the other side, if you're seeing really very, very explosive, and again, we can see this right here, right? When we break the all-time high, which was previously punched in 2021 back here, when we broke the all-time high, nothing really happened. It was, we're on the 4-hour time frame. We're not looking at explosive price action. It was a 4% move. It took 12 fucking hours. It wasn't quick at all. And if we look at what happened before that, I mean, this is explosive price action, right? Like here is another 12-hour price range, and we're up by 8% here, 7.5%. You take a look at this right here. 2 days afterwards, we're up by 26%. If we look at this, after 3 days, we're only up by 10%. It's very, very telling. When you get that big explosive price action, that's when you know it's going to stick. This was big explosive price action, and guess what? It stuck. This was not explosive price action. This was more weak. This was more uncertain. This was more, like stuff like that. And naturally, it didn't last, and the price ended up pulling back. So we're going to be continuing to evaluate this as time goes on, and that's why it is so important that you make sure you are subscribed and engaging with these videos so YouTube can keep pushing them forward to you when you're ready. We are amping things up on this YouTube channel. I've just done a live stream on Carl's channel. I've just done a live stream on the Fin Summit channel. I'm doing that again on the Fin Summit channel on Friday. Obviously, I'm going to be doing much more than all of that on this YouTube channel as well. So I'm super excited. If you guys are as well, then you know exactly what to do. Thank you all for tuning in to this video. It is very good to be back here in the office and doing everything I need to be doing. You know what to do, ladies and gents. I'm going to be seeing you all in the next one. Cheers.